It's podcast with our host, Tom Quigley of ClaimLinx. Tom, here we go. I can't believe 2026 is almost here. Are you ready?
I'm always ready.
And soon you're going to be in Florida once it gets colder, right?
It's what I hear. My wife tells me where I'm going to be.
And you just go. You're smart.
Up there.
All right. Our topic today, how small businesses can save on health insurance in 2026. What are the biggest challenges small businesses face with health insurance costs going into 2026? As we know, again, with the government shutdown, we have no idea what it's going to be.
Rates are going to go up based on the states they're in, based on if they're small group or large group. If they're large group, it's about their claims of their employees. On small group, it's based on what the departments of insurances allow the insurance companies to raise the rates. Unfortunately, for this year, it appears that the insurance companies are going to be allowed to jack the rates up quite a bit because the departments of insurance will get premium tax, by the way, based on what the premiums are, have decided that the insurance companies are losing their insurance and they need to increase the rate. Capital B, capital S, fill in the blank.
So by getting rid of some of these subsidies, if it doesn't change, there's still a chance the subsidies can be saved, Tom?
Oh, subsidies, yeah. The individual market, that is what affects that. So what they're saying there is that if they don't enhance the subsidies, people are just going to go without insurance to do other things, go to meta shares and stuff and get rid of by individual insurance. So they'll have less in the pool. So they're going to allow them to have rate increases to make up the difference.
So see, that's going to increase the price and everything else in healthcare because of that.
Oh, yeah. They allow them. So the departments of insurance, the states you reside, the good ones don't allow them to get away with that. The bad ones, they do what they do.
Okay. How can a medical expense reimbursement plans, a MERPs, give small businesses an advantage over traditional group health insurance?
It just allows them to do different things with the insurance that are logical, allowing people to be on their spouse's plan, on Medicare, individual, allows them to get on lower cost group plans, such as they call them level funded. If you set it up correctly, it's about a 50% difference in what you pay if you set the MERP up correctly, and the employees get better benefits.
And this is something we should do a webinar on, a MERP and for the business, and then how to set up one for an individual too. When they're a medical
individual, generally should do what's called a health savings account.
Yeah, an HSA. I'd like to have you teach people those two, Tom, because I think that's something that I'm telling you, I remember when I was an employee a long time ago in a galaxy far away, and I saw that, I'm like, I'm not doing HSA. Forget that. That's too much work. That's how I looked at things.
That had to be a while ago because you're manageable like myself.
Yeah. No, we are definitely that. Yeah, I'm totally unmanageable.
Good. Me too. So I understand.
No, when I was a teacher, but I would get this and I'd say, okay, I'm not going to do this. I don't know how much I'm going to spend in healthcare for the year.
You had what's called a flexible spending account, and that's where they have the use it or lose it deal. Yeah. So you have to estimate how much, and then the last quarter you're buying night guards for your tea.
So an HSA is different. So this is stuff you need to talk about on the podcast because
HSA is your money. There's no use it or lose it. It carries over to the next year. It's a much better vehicle. A flexible spending account should be used for dependent daycare if you have kids because you get up to $5,000 tax rate. That's about it.
And MERP is for the employer.
MERP is an employer's a cruel, but not a good way to put it. It's more or less like an HSA for a company where they're taking on their risks, but they don't have to fund. They only fund it as they go. So
like I said, you model that for people. People don't know how to do that. And it was interesting. I was talking to your good friend, Ed Lyon, and Ed and I are going to model tax questions using AI. Maybe we should try to model how we set things up to help people with certain things like HSA and stuff like that using AI, in which is better, Tom or AI? I think it's going to be Tom.
On day one, they're AI.
That's steak sauce you can't beat. So
prettier.
What role do plan audits play in uncovering hidden savings opportunities for companies with fewer than 50 employees?
The first thing is a group, you want what's called a level funded health plan. It's when you have to create a plan that allows good risks on the bad risks. You want to take advantage of the ACA laws, and combined with a medical expense plan, you prevent discrimination and you're able to lots of money. And if you're fewer than 50, you should always have a plan that's deemed unaffordable so that employees that choose subsidies or tax breaks if they qualify. Why would you not? There's no penalty for it.
How do individual plans compare to group plans in terms of saving for small business owners and their teams? We talked about this on another podcast.
Individual health insurance is lower costs generally than a group because of the way individual plans are policed by the departments of insurance and the federal government. And COVID actually made the individual plans a lot lower. So what happened during COVID was the individual carriers petitioned the states to raise rates based on COVID claims that would have happened, and the states said no way. But because they had to go to the federal government. Underneath, on the small groups, same thing. They went to the states, and some of the states allowed them to estimate the claims that would have been on COVID. So they allowed them to raise rates, not force them to have decreases. Because of that, individual plans became a lot less expensive than group. So when they go up 10% each year, guess what? You're at a lower number. So individual gets even bigger and bigger savings. It's just the way it is.
Right.
Some of the states have the same network. Some states have different, they have plans that aren't as robust as others. But businesses that get this allow their employees to purchase individual or with or without subsidies if they're small group, and a large group should do it for allow dependents to get it because there's no adverse taxes on it. If they did the math anyways, the way they're buying it versus paying the penalty, they would pay the penalty every time anyway. Some people just don't do the math.
It's math. It's important. We learned math in our heads, Tom, and we learned how to do it on paper. Just doing it in your head's not the best thing. It's doing both. I don't know. Were you a mathematician that did everything in your head, or you showed your work?
We used to play a game called Batter Up in third, fourth grade. They called a flashcard, and I would beat everyone. I'd be like, why are these kids so unintelligent in math?
What about when you had to show like an algebraic problem right out of long
so they'd go like this and go batter up, and they put the flashcard and it's you against somebody. And they made me count to 3 before I could answer to give the kids a chance.
So
kids would start crying and stuff. And those are the people making the decisions on the health insurance now. That's funny.
I used to be one of those too, but I don't make decisions on health insurance, meaning teacher. Oh, great. Or you're talking about the student. Oh, you're talking about the students. That's a good one. No, but did you show your work?
There.
Did you show your work? Because I couldn't stand when I was teaching algebra and stuff like that, and these kids wouldn't show their work, so I wouldn't know if they're cheating or not.
The work problems always irritated me because I knew the basic math, right? But, the train going 30 miles north meets the one going 50 miles south. At what point of the answer should be, who gives a blank?
Yeah, and that's what I would love to do is throw things away and go ahead and try to use that logic in real life. It's not happening. So you say, sir, I have to, before I present this, I have to give you a whole step-by-step plan of how I'm going to do it. And before you know it, okay, I'm out of time. I'll see you later. And I'm going to say, we're out of time. See you later. Make sure you go and schedule a call with Tom today. ClaimLinx.com. Appreciate it, Tom.
Thank you.
That was the special simulcast of the Neil Haley Show on the Cutting Edge Benefits Podcast, guys. Take care.